marketplaces are the core of all economies. So I just love being in kind of the epicenter of that and trying to figure out what's next. I really want to invest in companies that are creating like wholly new economic activity. They were like, hey, Colin, we love your deal flow. We love these early stage marketplaces that you're doing, specifically at pre-seed. You're kind of doing this on hard mode. Maybe you should go raise a fund. I never set out to do that originally. It wasn't on my bingo card of become a venture capitalist.
Hey everyone, this is Prashant and I'll be your host for the VC 10X podcast. And today we have Colin Gardiner with us. Colin is the founder and GP of Yonder Ventures, where he's investing in early traction marketplace startups. Colin is an experienced marketplace operator and was formerly the CPO and CRO of Outdoorsy, a highly valued outdoor experience marketplace. In this episode, we talk about Colin's story and how he started investing, their investment thesis at Yonder. What are marketplaces? Why marketplaces make great business models? Use of AI in marketplaces, and lots more. So without wasting any time, let's dive straight in. This episode is sponsored by my own podcasting agency called Podcast 10X, where I help venture capitalists, asset managers, allocators, and family offices in starting their own podcast and building a strong brand. Podcast 10X is designed in a way to work well with the busy schedule of investors, where we handle every aspect of podcast production so you can focus on investing. If you're looking to build a strong investor brand, starting a podcast should be right up your priority list. It's the only form of marketing where you can showcase your strong network, in other words, access to limited partners and founders, and grow that network further. And contrary to what most people hear, it's still very early to start a podcast. There are at least 10x more newsletters and 1000x more blogs than there are podcasts in this world. You can learn more about our podcasting services at podcast10x.com. I'll make sure to add the link in the description below. Enjoy this episode. Hey Colin, so good to have you on the VC 10x podcast. How are you doing?
Good. How are you doing? Happy New Year.
Very well, thank you, and same to you. To start things off, can we first have your story and how you got into investing?
Oh man, a long road. Well, I've been angel investing for a long time. I've been working in tech for the past 15 years, and I've always had friends that have started companies or done interesting things, and so I've always tried to support them on that. But investing with a purpose and earnest would be in the last 2 years. I left the company I was at for about 6 years, a company called Outdoorsy, as an Airbnb of RVs. And I was the chief product officer and then ultimately chief revenue officer there. And then after I left, I was looking kind of what to do next. And so I was advising and consulting a ton of marketplaces. I've done about 40 plus or worked with 40 plus companies in the last couple of years. And through that, there was a number of companies I've been an advisor for throughout the years that were raising funds. And I was like making intros to top tier VCs. And I was like, man, I want more exposure in these. These are like great companies. Like my angel checks are great, but how can I do more meaningful contributions here? And I had a friend that was like, you should do an SPV. And I was like, what's that? I have no idea what that is. So I went into Google, typed 3 letters in, and then found out what an SPV was. And I decided that seemed like something I could do. And so I started doing them. I did my first one in December of 2022, loved it. And then the following year in 2023, I did 8. And, in that process, I met some amazing people that would eventually become LPs in my fund. And through that, they were like, hey, Colin, we love your deal flow. We love these early stage marketplaces that you're doing, specifically at pre-seed. But, a few things. One, they're really early stage. So there's not a lot of traction, not a lot of evidence that they're great companies. 2, there's, not really many other name investors or other people with signal in these. You're kind of doing this on hard mode. Maybe you should go raise a fund. And so I, wasn't, I never set out to do that originally. It wasn't on my bingo card of become a venture capitalist. But a lot of great people kept telling me to do it. And around Christmas last year, so about a year ago, one of my first checks in the fund was, we were talking on Christmas and he said, so you're going to do this or what? And I said, well, you're going to send me some money, and sent me some money, and then we're off to the races. So I set up my fund at the beginning of last year. I did my first close in April, and been going ever since, and it's been great. We've backed 9 marketplaces out of the fund. I've done a few angel investments as well, but yeah, that's the story.
That's an amazing story. And we have had similar stories where, they start out with the SPV model because they have access to unique deal flow, and then very organically they are, pushed into starting a fund. And that's always a very natural, evolution of becoming a VC, right? So amazing. Tell us about the investment thesis at Yonder.
Yeah, so Yonder, my fund specifically, is focused on early stage marketplaces. And the thesis is really investing in the next generation of marketplaces that build new economies. And what I mean by that is I really want to invest in companies that are creating like wholly new economic activity. Like I think about Airbnb and Uber just as like really basic examples where they've essentially created entirely new economic structures and economic models. And I think because they did that, as did Amazon, they have these really outsized venture outcomes that are just amazingly interesting, and really, just amazing value add to the economy. And so those are the companies I want to go out, find really early, and back. That's the thesis. And so that means kind of being on the cutting edge of like newer models, different ways to acquire supply and demand, different types of supply that may not have been thought of before. But yeah, I mean, it's a fun space to be in. It's just rethinking how, commerce happens. Marketplaces are the core of all economies, right? Like they match supply and demand. That's how all economies work. And so I just love being in kind of the epicenter of that and trying to figure out what's next.
Absolutely. Sounds quite interesting. And if you had to define marketplaces at a very granular level, what would that be? How do you define marketplaces?
Yeah, I mean, a marketplace is essentially a facilitator that matches supply and demand at its most basic level. It doesn't have to be through technology. It could be a person. I mean, if we go back to the bazaars of the olden days, it was literally just a coordination point, right? Like it was a town square was a point where everyone came at a certain time to coordinate commerce, right? And so that's what marketplaces do. They facilitate transactions, they coordinate and lower those coordination costs so that the likelihood of buyers and sellers connecting is higher. So that's what a marketplace is.
Yeah, pretty awesome. And why do you think marketplaces make great business opportunities and can potentially produce great outcomes?
Yeah, I mean, I think it's a very simple thing is that when you match supply and demand, you're actually transferring value, right? There is a value transfer that happens there, and that is why economies exist and why they move forward, right? Is that there's constant value transfer between two parties or multiple parties, whatever it may be. And being as close to that as possible means that you can capture amazing amounts of like economic value. And so I think that's like what's so interesting about them is that if you can be the connectivity point for economic activity, you can make these really incredible businesses. And that's what I love about them.
Absolutely. And there's all this talk about AI these days. What would be the application of AI in the world of marketplaces?
Yeah, so I just wrote a post about this on my Substack. It's gardinercolin.com. But, the post was about AI and marketplaces in the future. And so I've coined a term around it, what I would call agent-led marketplaces. Uh, and it really stems from the, advent of the new AI models, agentic AI, and the ability to be proactive. I think this is one of the really interesting things about AI right now is that we're going from this, what I'd call this, prompt based model where it's essentially a latent tool that has to be pushed to do something by a command to an actual model where the agents may act autonomously and go do things that are goal oriented. And I think that is really fascinating when you start to think about that in a marketplace context of can I actually have this agent go proactively either acquire supply or proactively match supply and demand? Can it look at demand side buying activity and go proactively think about what they need to buy next and what the best deals are or whatever it might be? And so I think that is the area where I'm fascinated by AI, where AI in and of itself maybe replaces either the supply, replaces a lot of like the actual matching activity in the marketplace and almost becomes a SaaS tool. I think that's a really interesting area. Obviously, there's great AI applications for all the various operational issues in marketplaces, and I think those will be accretive to those businesses increasing profitability, making opportunities that were otherwise not economical now economical. But overall, I'm like really interested in this idea that the agents themselves can either play a critical role in the marketplace, make it run, or even be the supply themselves.
Absolutely. Yeah, that's quite interesting. And what are some interesting examples of, marketplaces? You have shared some in our conversation till now, but I'd love to learn more about some more.
Just some interesting marketplaces. I think one of the ones that I talk about a lot because I think it is is illustrative of like what I look for in marketplaces is a company called Autopilot. They are a stock trading marketplace, but they're different in the sense that what they do is a marketplace of copy trading bots. Essentially, allows you to go copy trade certain people while having all of your funds custodied in your own account. You're not giving your funds to anyone else. So they, have an API into Robinhood, and they'll actually make trades on your behalf based on what someone else is doing. And so they have this marketplace. Initially, was a copy trading marketplace of Nancy Pelosi, Michael Burry, Citadel, all these things, which is really interesting and novel. This new supply coming online. That's something I care about a lot. Is like, can you bring something online that didn't exist before? And they just released what they're calling their marketplace, which is now allowing you to do copy trade portfolios of like notable people. So they just launched with Liquidity, with a big Twitter account, and it's just growing super fast. And I think what is great about them is that they have done a very good job of bringing on net new supply. Like this, you can't get this anywhere else. It's super defensible, makes it really interesting. The next thing that they did really well is that they owned their own distribution. And I think this is a big piece for marketplaces that where people stumble and fall is they don't get demand aggregation at scale right. And what they did and are doing is that they've literally created social accounts for, inverse Jim Cramer trading, Nancy Pelosi stock trader, and they have like I think up to 1 million followers on some of these accounts, and so they have built-in distribution, right? And I think that is a really smart way to go about it. And I pressed founders pretty early on to think about distribution. Because if you can get it right, you can do some really amazing things. But if you don't have some proprietary or earned insight or proprietary knowledge around like how to do that and get demand, you're going to have a hard time. You may be able to scale supply, but you may falter in trying to get demand.
Absolutely. Quite insightful. How do you think marketplaces can benefit from network effects?
Well, I mean, I think one of the core reasons you build a marketplace is to, build a network effect and also take advantage of it. And, it's just one of those things that network effects just get better and better with scale, specifically in the context of marketplaces, right? As you add more nodes to them, and it just increases the strength of those things. And so I think for me, like one of the things I always tell founders is like scale is your friend in a marketplace, right? And scale can mean like breadth of inventory, depth of inventory. It's not just like, more visitors, right? It's really about like increasing the nodes in the network that drive value. And so that takes a lot of different forms, but long story short is just increased like breadth and scale really benefits your network effect. And, that's one of those things that once it gets going, it's just so hard to disrupt. I mean, I look at eBay and like, it's just a juggernaut, right? They're still here. Like, they're not going anywhere. And they're just one of the OG marketplaces. And I think it's a huge testament to network effect. And many people have tried to cleave off large chunks of GMV from them with vertical specific marketplaces, or even just competitions, think Etsy, whatnot, all these different competitors, StockX, the list goes on, right? Of very vertical specific players. And eBay's still there. May not have the best product experience, but that network effect is so strong that it's not going anywhere.
Absolutely. Yeah. Quite interesting. How do you think marketplaces evolve over time or have evolved in the past over time?
Yeah, I think, much like any startup, uh, in general, or just like, technology in general, is like they take advantage of these certain technology windows that are occurring. And so I think, if you think about Gen 1 or, marketplaces 1.0, as I call it, I think eBay's, Amazon's of the world, they took advantage of bringing supply online, like literally just being online. Like, can you do e-commerce, right? Like that was the wave that they picked up. And then the next generation, marketplaces 2.0, really was in this mobile era, right? If you think about Uber, like basically Uber couldn't have existed without the mobile phone. And Airbnb largely took advantage of the growth in that as well. And so I think there was this window of the mobile era of technology that was really powerful and allowed certain types of marketplaces to thrive. And I guess the question next is like, what's 3.0? And I think there's, a lot of ways to think about it. I think AI and agent-led marketplaces are like a big window for that. And they really play into this concept that I have, what I call marketplace plus models, where, marketplaces that are really successful eventually are just a marketplace plus something else, marketplace plus SaaS, marketplace plus fintech, plus insurtech, the list goes on. It could be plus community, plus content. And I think AI plays really well into that. And I think that window is opening right now, and we haven't seen any huge winners pop out of it, but we're already starting to see, search engines like Perplexity starting to take advantage of this and kind of build in commerce. And so I think the next big marketplaces are coming, and they're going to be built on AI.
Absolutely. Yeah, totally. And would you like to share any of your interesting portfolio companies that you bagged that are solving important problems?
Yeah, I mean, there's many that are doing great things. Um, I think one of them that's like really interesting right now, just topical, because they've done a funding round, seed round, is Ruck. They are basically building out both delivery as a service and e-commerce for the construction industry. So they're basically looking at how do you connect and get delivery of construction materials from all the different wholesalers and providers to actual contractors and things like that. And I think that is a massive offline space that they're coming into and can do some really amazing things in. And so, my fund is really after these like just whale outcomes, right? And so I want to play in these markets where ultimately the marketplace is just going to be able to bring supply online that wasn't easily accessible and make it legible and, essentially purchasable. And I think Ruck is doing that in this space around construction materials, which has traditionally been, very illegible. Another one that space that I've been really interested and excited by, and there's been some successes that are starting to pop up, is in the excess inventory space. I won't name the company because they haven't announced their funding rounds, but I think that space is really interesting. Like excess inventory is a space where you can actually go out and find supply that is probably just perishing or being thrown away or whatever it might be, and bring it online and make it sellable and actually create new markets for those things. And so I think that's another space that's really fascinating overall. I just like anything that's bringing on supply online that didn't otherwise exist.
Yeah. And at what point do you think marketplaces or marketplace businesses hit that escape velocity where they get a life of their own and they can just go on from there, right? What's that point? It can be called product market fit or something else, but what's that point?
Yeah, so I think there are two different things. I think product market fit for a marketplace is just proving out that you can match supply and demand. Like that someone wants to buy this supply, right? And the question is there's so many marketplaces that do that. The question is whether it can scale. And so I think for me, the scalability of it is really the core question about whether a marketplace is venture scale or not whether it's a good marketplace or not. But the way I look at it is, or at least in the traditional paradigm, is like if you can get your marketplace to enough scale and supply where you can largely stop advertising and keep growing the business at a very healthy rate, that to me is a really good indicator that you've hit like escape velocity. That's what I've seen over and over again, is that marketplaces that can really stop advertising, and maybe they do still do some advertising, but like it's really not their core focus of their business. Those are the ones that are just going to keep chugging and going and churning away. And so I think those are that's something I look for pretty early on, is like, can this business be growing just almost organically, and do they have 60 to 80% plus organic traffic? It doesn't have to be SEO. It could be referral, word of mouth. Like, there's a lot of different ways to do that. But the faster you get to that high percentage of organic growth, the better like indicator it is of like the likelihood that you're going to have like a successful marketplace.
Yeah, absolutely. And you're mostly investing at the early stages. So do you find these signs? Are you able to have that data to, judge for that?
Yeah, I mean, look, I try to not invest in anything that doesn't have revenue, because revenue, i.e., matching of supply and demand, is product market fit for me, and so that's really where I focus. I make very rare exceptions, but I really think that you can underwrite these things really early with the insight that if they're not matching supply and demand successfully, it's hard to underwrite it, right? Like, why? Like, it's just, you need to prove that out. And I think there are great businesses, like another portfolio company of mine, Packsmith. I think, some of those things can be hard because you have to maybe do like a case study with a bigger brand or something like that, like an enterprise player. And so I try to be like, understand that. And I think that's a really interesting business, where they had to spend a lot of time building out the embedding capabilities and the SaaS piece of it for that business really to fly. But now, to your point, they've kind of got this organic flywheel that's really moving the needle for them. They're like a marketplace for like e-commerce enablement, like fulfillment and logistics. They handle like at home fulfillment using what they're called packsmiths, like people at their house doing like fulfillment for e-commerce companies, and really kind of competing with like same day delivery with Amazon and things like that. I think those are some really interesting models overall that like they don't have like huge supply and demand like spreads potentially on either side, and so they maybe have to start a little bit differently than maybe like a straight consumer marketplace with like really high number of suppliers, if that makes sense.
Yeah, yeah, surely. And would you say marketplaces have a first mover advantage?
It's a good question. No, I don't think it's required. I think what is required is to aggregate the right supply that the demand wants to to buy or rent or whatever it might be. And I think there's plenty of examples of companies that weren't first movers. I think the marketplaces tend to be winner take most. They don't have to be first, but they tend to be winner takes most. And I think the two vectors they do that are aggregation of very unique supply and having really good distribution strategy and growth.
Got it. What are some mistakes that you often see marketplace founders making that could be avoided?
Yeah, I think there are many, and some of them aren't just marketplace specific, but marketplace specific, I would say, is I think not having a good handle on your unit economics as you scale. Like, that's the number one blow up that I see for people that have proven out product market fit and are scaling, is that they don't have a good handle on their unit economics, like i.e. the payback period, LTV to CAC. Because I think you can see fast growth in top line numbers like GMV, all of these things. But once you start digging in, because you're acquiring both supply and demand at the same time, and your efficiency improves as you add more supply, it can be very hard to understand it meaningfully and put it, and apply it. And I think that's where I see a lot of people like really falter and blow up.
Yep, got it. How do you source high quality deal flow that's specific to marketplaces?
How do I source companies? Yeah, I think, not to give away my secret sauce, but I think it's fairly obvious. Honestly, is that I do a ton of content around marketplaces. My network is very strong, obviously, with having been in marketplaces for a long time. So I know a ton of founders, a ton of investors, and things like that. But the number one thing I do is I try to write really valuable operator-oriented content And that is how I meet so many great founders, and how I continue to engage with them. And so, I don't think there's some secret flywheel here. This, obviously there's deal flow that comes from being an insider on things, but where I feel like the real edge is finding the things before they're big. And so the way I do that is write content that is helpful for operators building their marketplaces so that people think of me first. Like, I'm the marketplace guy. That's what I want people to think of. When they think of marketplace, they think of Colin. And so I try to post every single day about marketplaces, and I try to write really relevant content so that when people search for things about marketplaces, they find me. But they also just think of me. And when you hopefully now, if you're talking to a founder or investor, someone says marketplace, you're like, oh, you should meet Colin. Like, that's success for me.
Absolutely. Yeah, that's amazing. And what's your portfolio construction strategy at Yonder, if you can give us an insight?
Yeah. So because I'm investing earlier stage, I believe that there has to be a balance of diversity in the portfolio of bets, uh, but also balancing some concentration. And so the way I handle that is I'm targeting about 30 companies in the portfolio. And what I do is and so that's just like core checks from the fund, all evenly weighted, like even check size across all of them. But I also layer on top a co-invest across almost every deal that I do so that I can upsize accordingly, and then do follow on with SPVs. So that's kind of my core strategy. I personally kind of lean more towards a diversified at earlier stage. If I was doing later stage, I think I would do more concentrated portfolio approach. But for me, I think there's an inherent trade-off at earlier stage to getting more breadth of exposure across these businesses. That's really important and just plays out in the numbers. So it's a constant balancing act, right? Like, the more diversity you have, the higher multiple you need to exit on one company to return the fund, right? So if you're investing in 100 companies and everything goes zero but one, you need 100x on that one company, right? Just to return the fund. And so I think there's a sliding scale. There's a price you pay for diversity and diversification. And I think that's the trick, is figuring out can you find the sweet spot where you can invest in businesses that typically have a certain size exit, right? And I'm underwriting against can they do 100 million net revenue, right? And so given that, I've kind of found that the 30 to 40 range of companies is kind of the right sizing for the fund that I'm after at the stage I'm at, given the exit size and multiples, to essentially pay for the diversification cost. So
Yeah, absolutely. That's an interesting insight there on how there's a cost to diversifying, right? So how do you pick in that case? Have you a multiple in your mind before you're investing, that okay, can this potentially give me a 10x, 20x, 30x return, right? Do you have that in mind?
I mean, every given investment's a little different because of just the valuation entry point. But my basic criteria is can this get to 100 million net revenue, right? And I think that's the thought process I go to, because I think that's immediately the barrier to an IPO, right? And if I think about all the amazing marketplace outcomes, they're really ones that get to IPO. And so that's really what I'm trying to underwrite against, is one, two, hopefully three out of the portfolio get to that size. I mean, would you be happy with a private exit of couple hundred million, in valuation? Probably, as a pre-seed investor. But I think when I think about companies that return the fund in incredible ways, those are big IPOs. So, for example, take Airbnb. If you invested in every seed round that happened the year that Airbnb raised their seed round, everything else could go to zero, and you would return, I think, a couple thousand X on just Airbnb alone, right? And so I think that's just instructive, right? If that can happen, you can have these really outsized outcome funds. And it also happens that the same year, I think Uber and Pinterest also raised their seed round. So if you also got exposure to those, you just had an incredible fund, right? And so I think for me, that's where the breadth comes back into this, is just making sure that you can get across enough of these big winner marketplaces where if you can hit 2, maybe even 3, you just have these really incredible multiples on your fund.
Absolutely. Very, very important point there. Coming to my last main question before we do the rapid fire round. And this is, what's been your biggest learning investing on startups over the years?
Oh, well, the biggest. I mean, I've learned so many hard lessons that have hit me across the forehead, But I think one of the things that more recently with a fund that I've been really internalizing, just really deep down internalizing, is there are many great businesses out there and so many great founders that I would love to back them all, but they are not all venture scale businesses. And that's okay. They can build incredible businesses. I would love to help them and be a part of it, but they're not good fund investments. And I think that is a hard truth that is very hard for founders to hear and very hard for investors, at least in my experience, to internalize, right? And I am trying in the context of the fund to be as ruthlessly focused on finding those big wins. And I think that is the lesson that I've learned. If you're going to go angel invest in your own portfolio, great. Like, go have fun. Like, it's literally like, it should be fun, right? Like, that's like the goal, or at least I think it should be fun. That should be a goal. But from an actual fund perspective, there's still fun in fund. But the point is that you are really focused on a return profile. And I think, you sell LPs on what you're going to invest in, and you need to deliver on exactly that as much as humanly possible while accounting for outliers that can give you those outlier returns.
Absolutely. Yeah. Great learning there. Now let's do the rapid fire round, wherein I'll ask you 6 quick questions about the investing you're doing, and you have to give 6 quick answers.
Let's do it.
So the first one is, what are the sectors and regions you invest in?
I'm basically Delaware C Corps that can be located anywhere.
Awesome. What's the typical stage of investment?
First check to pre-seed, some seed.
Okay. Do you lead rounds?
Not currently. Fund 2, here we come.
Great. What's the typical check size?
Right now, let's say the average over the last couple has been 100K plus.
Got it. Great. Where can founders get in touch in case there is a direct way?
Yeah. So a few things. One, yonder.vc is my website. You can email me at colin@yonder.vc. I love it if you submit your company through the link so I can easily track it. For content, go to gardinercolin.com. I write extensively about marketplaces. I think founders will get a lot of value out of it. And then you can find me on LinkedIn and Twitter. My handle on, I should say X now, is at Colin Gardiner. And then just Colin Gardiner on LinkedIn. And I try to post a ton of like helpful and useful information content there every day.
Awesome. I'll try to put as many links out of those as possible in the show notes. Thanks so much. And last one, where can our listeners follow you?
LinkedIn and Twitter. Those are like the 2 spots, and Substack. Those are the spots.
Awesome. Great. I'll try to put that in show notes. Thank you so much, Colin, for making time for this. It's been a pleasure having you on and learning about marketplace businesses. I wish you happy investing.
Of course. You too. Thanks for talking.
Thank you so much.